Good morning, friends. Welcome. Going to give folks a minute to join us. We have gone live with Friday with Frank. We're here in scenic downtown, admittedly rather quiet downtown Canandaigua, but we're going to let you folks dial in, take your virtual seats. We will be with you in just a moment. See, we have roughly a couple of dozen of you in the audience already. Thanks for taking time out of this Friday. I know you'd rather be outside sunbathing, but you know. Give us a moment or two. I see some family out on the street right now. Folks doing what they can to be normal in Canandaigua, and that's part of what today's about. Going to take a moment and check on today's featured guests. Excited to welcome Frank. Hi, Frank. I see you've come into the room.
Hello there. Nice to see you.
My pleasure. Just going to go down the list here. We have some other friends that have reserved seating, so to speak. All right.
Not sure how to activate camera, but I don't know if you care.
Well, I think that would be helpful. Hover your cursor around the bottom of your screen and a menu should pop up.
It's not giving me the option. It's all right. I have a feeling it's because I didn't connect in properly. I don't know if I had the right way to connect in. It's all right.
All right, let me see. I think I just gave you a promotion. I think we can see you now. There we are.
Gotcha.
Hey, all right. We've got a lot of people in the queue, roughly 30 guests this morning, so I'm going to get moving. Good morning, everyone. My name is Ethan Fogg. I'm the president of the Canandaigua Chamber of Commerce. Welcome to Friday with Frank. Today's webinar is hosted on a network maintained by Cobblestone Networks. While my clothes are not, in fact, Botany 500, they are pressed and cleaned by 10X Town Cleaners here in Canandaigua. And while I'm business on the top, I'm boots on the bottom, thanks to Davidson Shoes. And today's refreshment sponsor, the Dolly Java. My guests today are from Canandaigua National Bank. This year we are celebrating, in fact, 110 years together. Frank, you look great for 110.
Thank you.
We've asked Frank, the CEO, to begin the conversation with a simple overview of the CARES Act and government funding programs in response to the COVID-19 epidemic. He and his team, we have Deb Rott and Mike O'Donnell also on the call. They're shy, a little off stage today. They're going to be offering overview and insights into the program and perhaps some candid advice to businesses of all sizes about how to maintain healthy relationships with their lenders in circumstances like this. The session is being recorded and will be available for you viewing by the end of business Monday on the Chamber's website. If you have questions or comments during the conversation, on the toolbar on the bottom of most screens, there will be an opportunity for you to ask questions. We'll try to get to them all, and if we don't, in fact, get to them all, we invite you to reach out to Canandaigua National at 585-394-4260. And for those of you who think that I've forgotten, there is a misnomer of the week. This misnomer being a big word for the wrong word, and this week's wrong big word is free money. What we're going to talk about today is there is no such thing as free money. Frank and his team will help us better understand, among other things, the limitations, guidelines, parameters around payroll protection programming and the EIDL. And without any further ado, it's my privilege to introduce our panel. Frank, who you see on screen, off screen, Deb Rott, branch manager in Canandaigua, and Mike O'Donnell, business development officer. Together, the three of them are going to inform, and I wouldn't be surprised if entertain us on a day like today when we're learning more about how to have the best possible relationship with our finance partners as businesses. Frank?
Thank you. I think the word of the day, certainly for today and the next coming week or two, depending on how long funds last, is the payroll protection program. Certainly, there was some other SBA funds that the EIDL or TL, I can't remember, the EIDL funds, and those were funds that were accessible directly through the SBA. Gotta keep my other screen live. And so those were applied through the SBA directly, and the banks didn't necessarily have anything to do with that. With respect to the payroll protection program, as you all are well aware, originally there was, I think it was 350 billion that was put in a pool and there was a lack of clarity in the beginning in terms of whether or not this was a grant program, whether or not this was a loan program, whether or not the banks were using their own capital, whether or not how this all worked. Originally, under the CARES Act statute, it allowed for up to a 10-year loan at 4% with some forgiveness associated with it. And eventually that got, I think on the third iteration, it got honed down to a 2-year loan with a 6-month deferment at 1%. And with a forgiveness provision determined after 8 weeks from funding. And that's where we ended up with today. For those of you who are unaware of the particulars of this, well, before I go there, there was a huge amount of demand for this program initially, and we got hammered. And our own institution, we ended up pivoting about 120 people from other parts of the organization in order to accommodate the enormous flow that we got from this. I'm very, very happy to report, and I know that other institutions might not be able to boast this, we got all but about 150 applications approved through the SBA process. We knew that it was important, and that's out of a total of 2,600 plus applications that we got hit with in about a week's time. I mean, it was it was a huge crush. We're talking about a year's worth of volume, lending volume occurring in basically a week and a half. It was obscene. Now, we recognize straight up that this was really, if you read the statute and if you talk to the legislators, and shout out to Tom Reed in particular, he's been extremely helpful to us in terms of being a conduit with our conversations with the SBA and other agencies to facilitate those programs or to facilitate this program. But basically, we moved hell and high water under the concept that once we understood this was a grant, this was about getting as much of this federal money into our community as humanly possible. So it doesn't matter if you are a customer, it doesn't matter if you are a non-customer. The key here is come one, come all, let's get this money, let's get our employees, our community employees paid so that they can feed their families, so they can pay their rent to the extent that they are paying rent still, and pay utilities and all these other things. People, I don't know if people are aware, but there's a lot of people out there who are having very, very hard thought processes right now about how they're going to keep food on the table. This is a real environment. Only God knows how long this thing's going to continue for. So the word of the day the phrase of the day is keep your powder dry. And what I mean by that is I understand that there's a lot of pride out there, and I appreciate that. But to the extent that you have concerns about whether or not you should be asking for deferment, whether or not you should be participating in these programs, the best thing I can advise you to do is call us or your lender, whoever you're dealing with. Call your banker, because they're the ones who are going to be able to tell you what programs are out there, what's going on, and how those programs might apply to your own personal circumstances, because it is different depending on who you are, what you're doing, how you're structured, and the like. So now, as a lot of people understood, the PPP program initially went out, 350 billion, or 349 technically, and of course the fund got closed down. And it got closed down, or got expended, I should say, much quicker than I think anybody had anticipated. So obviously we all have heard, and like I said, there was a lot of people who were still in the queue, if you will say, if I can say that safely. I know from talking with other institutions across the country that there were a lot of people in the queue. And because I think, and especially initially, there was a lot of confusion in terms of who could apply, what were the numbers you would use to figure out what the amounts are. But it really is pretty simple. And the guidances that came out ultimately were very simple. Less than 500 employees. What you do is you look at, you take your average payroll over a 12-month period, divide by 12, multiply by 2.5, and that's the amount that you could get up to 10 million, assuming that you had that now, and assuming you were under 500 employees. And that goes from 500 employees, corporation, S Corp, LLC, whatever your formulation is, all the way down to the sole proprietor. And we get to the sole proprietor aspect about this a little bit later. And honestly, I'm going to end up punting to either Deb or Mike, because they really are the nitty gritty specialists on this, whereas I'm the kind of the broad picture on this concept. The concept, though, once again, once you figure out what the total potential loan amount would be, then what you do is, once you get funded, so you had to apply, earmark or earmark that funding from the SBA for your customer. Once you had that, then the money is spoken for. And so from that point, then it's about going ahead and getting that converted into a 2-year note with a 6-month deferment, which means no P&I for the first 6 months. Thereafter, any remaining outstanding SBA debt would be amortized over basically an 18-month period, P&I. Now, this was designed under the understanding that after 8 weeks from funding, you would track your payroll expense as well as your mortgage interest, if you have a mortgage, or rent expense, and utilities. Submit proof back to the SBA of those expenditures after 8 weeks worth of those expenditures. And then, to the extent that 75% of that is payroll, of those total expenditures is payroll, and the other 25% are those others that were named, the SBA will give you forgiveness. And so if done cleanly, 100% of what you borrow will end up getting basically forgiven and no more debt. To the extent that some of those not 75, greater than 75%, or I'm sorry, greater than 25% are non-payroll, well, then some of that stuff is not going to be forgiven, and then you have the 18 months to go ahead and either pay off the remainder. But hopefully what you do is you segregate the funding, and the stuff that you don't use for that purpose, for payroll and the like, you hold. And if you don't spend it for those purposes, you don't spend it at all. And at the end of the period, and any non-dischargeable amounts or forgivable amounts, you just pay it back. I mean, that's what I'm recommending to people and the like. So once again, funds went quick, they ran out. There was a lot of confusion, especially with the bigger banks. A lot of people were only taking their own customers. I heard some of the regionals or some of the other institutions. First of all, if you weren't a customer, forget it. Second of all, if you weren't maybe a preferred customer, forget it. Some institutions only allow people to apply by invite only, which was bizarre and completely contrary to the statute and the guidances and everything else. But I know that there was a lot of institutions that were pretty gun shy from the 2008 crisis, where, you know, completely different foundation to that crisis. But the lending institutions certainly got targeted politically, for right or for wrong. I don't care on that aspect. But I think that was why a lot of the larger institutions were pretty reticent to jump into this thing with the vigor that a lot of the smaller institutions did. So fast forward, money runs out. Our institution had, like I said, about 150 in the queue that didn't get through. We immediately communicated out that, hey, we think there's another round coming, because that's what our Congress folk were saying. And once again, I do have to shout out to Morelli and Ann Reed. They both have been very, very helpful in keeping the communication up and being very responsive. So it's been a great team effort that way. Sure enough, it was very clear that they were going to figure out how to, I think originally they were just going to dump about another 250 billion into the program. Well, that quickly got derailed as partisanship starts, you know, coming to play. However, yes, there was a week and a half delay, but as most people have heard, I do believe it did pass the House now. In terms of a second round of approximately 500 billion, 310, I believe, it might be 320, but 300, let's just say 310 billion has been earmarked once again specifically for this PPP program. Additionally, there's been a portion thereof that has been specifically earmarked for smaller institutions to make sure that that monies aren't getting snapped up by, you know, the big banks only for the big companies. So I think that's a great thing. I think that there is a lot of positive aspects to this program. I think that the smaller institutions in particular tend to deal with the largest number of companies, which tend to be also be the smallest companies. So to the extent that you have not had an opportunity to talk to your lender, I would be talking to them now. Now, a lot of people, once the money ran out, and ourselves included, we shut down. We had a portal right on our website where you just click on it and it ran you through the application process. Once the money ran out, we went ahead and obviously shut that down. And like I said, we did have a couple that were still in the queue. Once it became pretty apparent that this thing was about to open up, we reopened that portal. So you just can click on it, go through, and get the necessary documentation and submit it. It's actually a very simple, clean process. To the extent that you don't understand what you need to submit, or you have questions about it, call us. Have the conversation, please. That's what people like Deb and Mike are for. And like I said earlier, we pivoted a huge number of people within our institution to accommodate this expected volume. I know all institutions have done the exact same thing. So so that's where we are today. We expect, like I said, I believe it just passed through the House, and next step is to the President's desk, which there isn't any indication that I'm hearing from legislators or banking organizations or anything that would suggest that this isn't kind of a fait accompli at this point. And then the next question is, well, when will the SBA be in a position to go ahead and start funding? And when are they going to open up their portal, which is what they're doing? They're taking all these applications through their SBA One portal, E-Tran, and another corollary. As a lot of people realize, last time around, this E-Tran system, this SBA system, was set up for a small fraction of the volume which they actually got. So there was some, hiccups, as would be expected. I mean, look at what's happening with the unemployment system right now. It just wasn't, when you take a system that wasn't designed for that kind of volume and try to crunch it all through, the thing's going to seize up on you. And now I think that there's been some good partnerships. You know, there's SBA has gotten a lot of criticism. I actually have to give them a big high five for how quickly they moved and how much volume they were able to push through a system that was not designed for what they used it for in such a short amount of time. So a high five to them. Probably the only one you're going to hear say that, but I mean, dealing with technology systems, just in a small institution such as the one I'm working through, you know, it is complicated and high thinking engineering that goes on to create these systems and have them work A, safely, and B, securely. So once again, high five to them. So here we are, we're geared up and getting ready to go. So Mike or Deb, do you have anything you would like to add on to this?
No, I think the big thing that you were talking about is bottom line, communicate and get to your financial institution. Talk to us, let us know what you're going through. If you're struggling with an area of getting food on the table, is there something that we can defer? Can we help you another way? So I think it's all about communication and keeping that line open with us, and let us know what's going on.
And I would actually add Deb's comment there and to yours, Frank. Anecdotally, we've had many clients that have come in and been so appreciative about the information that we've given them, and it's what we do. It's about education and advice. It's about being a partner, especially in good times and in bad. And I think people appreciate that. And I would echo both of their comments. Reach out. Communication is key. The earlier, the better. There are things out there that we can help you with, and many financial institutions can help you with. So please reach out and keep that line of communication open.
Thank you, Mike and Deb. I actually do have some questions in the queue already that I think are very well placed based on where you left us off, Frank. There's some questions specific to the 8-week guideline. And because they're very specific questions, I'd like to read them aloud if I may. The first one is, curious to know when the 8 weeks start. Would it be at the date of deposit or the date of the loan signature? There's a 2-day difference for the person asking. I'm sorry?
I'm sorry. It's the date, in my understanding, is it's the date of funding. So the date that the money hits your account. That's
Gotcha.
where the 8 weeks start, yes.
Thank you. There's also at least one report here of businesses being told that they've been approved, and this is not implying CNB in any way, but that the bank in question has not made the disbursement, yet a 10-day window has passed. Will this affect the business? Will it affect their 8-week measure? Yeah, there's some concerns about undispersed monies and whether that affects the terms of receiving the money.
Well, it does to the extent to the last question we just answered. It's kind of interesting, and we are one of those institutions. Listen, we've been moving hell and high water here to get all this stuff through. Our first push was just to secure the funds so they wouldn't go somewhere else outside of our community. So we got that through. We are about 3/4 of the way through the documentation process. So we've secured the money. Now it's about going ahead and creating the note and based upon the approval. And then we're getting it shot out to the customer for electronic signature. And then once that is returned, then we can go ahead and fund the loan. And so we are in the midst of that process. And I know that Charlie Vita, the head commercial, my chief lender right now, has been working his tail off to get all those out. We think that we're going to be able to get most of that out right before this next push happens, which we're pretty excited about. So yes, and I do apologize to the extent that there's been delays, but we really have been working our tails off to get the secured money. We got about $300 million worth of funding into this community through this process. So very proud of that, but you're right. And I do apologize to the extent that people are waiting for ultimate funding. Please give us a ring if you're concerned. A, B, keep eye on your email addresses, because that's where the addresses that were given through your application process. That's where we're going to be where a lot of communication is coming through. If I'm speaking some fallacy, Mike, please shout out. But that is we're working hard on it now. It is interesting because some people have talked. I'm sorry, Mike. Do you have anything you want to correct in what I just said?
No, I think that's pretty accurate. Again, we're the key is, I think, again, contact information, email addresses. We're trying to get these through as quick as we can, and it's again been running 3 to 4 days roughly for the funding of these. So our group is doing a great job. Our IT folks, they're the unsung heroes here, folks. We're the people on the front lines, but these people, there are people in our IT department that I don't think have slept in a week, so over 2 weeks. So they're the unsung heroes, and yeah, we're getting these through as quick as possible. And again, it goes back to communication. If you have a question, if you have a concern, reach out to us. We'll answer that. We'll get back with you and let you know where these things stand.
Now, what's been interesting though is back to that the question about when does the 8 weeks start ticking? It starts ticking when you're funded. And what has been interesting is some people have actually said, well, can you hold off on funding because it's end of April, early May. I haven't started staffing up yet. ... The answer is no, can't do that. I mean, the rules are pretty clear here in terms of what's going down. Now, I mean, what I've been arguing too, will mortgage interest be forgiven as well? Yes. What I've been arguing to Reed and to Morelli and anybody who will listen to me, which, you know, I'm sorry for those people, is that we might want to consider, depending on, because of the phase of where we are in the season, in terms of, you know, landscaping, things like that, starting up and some of these other things, that we might instead, you know, extend that 8 week period to say a 16-week period, so that people can staff up, hire people, get things moving again, the like. I don't know. I mean, people say that's a great idea, Frank, and then they stop. So I don't, you know, we'll see what happens with that. There is yet another round of stimulus being contemplated, kind of round 4 here. They're already starting to talk about, we'll see what happens with that. I don't know. And we'll see how quickly these funds go. But with respect to calculating your forgiveness, it is payroll expense actually paid over that 8 week period, as well as mortgage interest or your rent paid during that time frame, and or utilities and some other things. And those guidances are getting clarified right now in terms of what kind of documentary information they're looking for now. And so we'll have 8 weeks to pull that together, and we'll be a heck of a lot quicker than that with respect to actually communicating with you all or anybody who's our customers in terms of what those documentation requirements actually are. But I want everyone to feel somewhat relieved in that the level of documentation, as stated within the statute's just like was pretty much, we'll accept anything. And we'll see what the guidance that comes out of this actually states. But this program really was intended to get money as quickly as possible into the hands of employees, to keep people well, not even necessarily employed, but fed, if you will. So, and that's why we have taken this very seriously, and we have been tearing our guts out to get things out as quick as possible. But you can only push people so far before they break. And I don't want to break my people either. I mean, people have really risen to the challenge. And I'll just say for all you out there, we had a number of, we pivoted about 120 people from their other jobs into handling a lot of this. So a lot of these people have always been kind of backroom. They haven't necessarily had a lot of client contact or the like. And this is an unusual time to be a community banker. And I'm going to say, honestly, it feels really good. we are helping a lot of people who really need it. And so some of these people who have kind of been maybe more in compliance realm or other things, I mean, I've been getting emails going saying just how thankful they are to be involved in being able to help the community, help the community directly like this, help families directly. It really feels good to be a community banker right now.
Thank you, Frank. We do have some other rather specific questions. So with this much brain power in the room, I'm going to keep going with some of them. When we look at payroll costs, there's some question. No two businesses truly are the same. Some give bonuses or commissions as part of customary operations. And there's an inquiry as to whether that's considered a legitimate payroll expense or whether that's carved out in some way in this legislation.
I think that, oh, go ahead.
No, but I was just going to mention that, yes, that's considered in the average for when we calculate the monthly or average for the year. So we'll look at those bonuses, commissions, wages, health insurance premiums. I'm just trying to go through some of the things that are involved there. Those things are all calculated into that monthly number and divided, and that's those are expenses, or excuse me, payroll expenses that can be included in that calculation.
Thank you.
I would like to add to that though. Okay, and anybody who's been reading some of the news. I mean, I think Mnuchin, the Treasury Secretary, put out the other day. Let's not get too cute with this. And what I mean by that is foreseeably people are going to all of a sudden decide they're going to pay themselves a huge bonus or something that is not customary and was not reflected in the averages of the prior year's documentation used to calculate the loan amount or the grant amount. So some people are going to use this money for reasons that it was not intended. There will, and I mean, you've already heard some of these bigger operations out there who got this grant money who are now saying, no, we'll return it to the small guy. And I appreciate their sentiment with respect to that. I mean, the way I'm looking at this, right or wrong or indifferent, is even the big guys have their hourly employees and the like who need a paycheck. So, I mean, I understand from a PR aspect why they did it, but if you think about it from a program aspect of this, this more goes to how much funding should be going into this program as opposed to whether or not people are quote unquote too big. Because if you recall, also with respect to the calculations of the payroll expense, it's capped at 100,000. So if employees are making $300,000, you can only apply for up to 100. Divided by 12, times 2.5, right? So it is capped, and there's only so far you can really go with it. So nonetheless, be conservative with this. I don't try to get cute. There will be some investigations later on. There will. The Secretary of Treasury the Treasury Secretary has already said, guess what? We know there's going to be fraud in this, and there will be investigations. So just do the right thing.
Thank you. Another question from the audience that looks like an attempt to do the right thing, but they want to do it right the first time, is if they're a seasonal business and they customarily hire up in this time of the year, will new employees be appropriate for consideration in those calculations? Because the term payroll protection would kind of, in some people's mind, imply making whole the people that already work for us.
All that matters is what your actual payroll expense is.
Fair enough.
From the forgiveness standpoint.
Right.
Right. So if that's what you spend on payroll, that's what you spend on payroll.
Fair enough. Perhaps another consideration for some people in the audience, if for whatever reason you either don't qualify for one or both of the programs, or regardless of subsequent releases of money from the government, that there's never going to be enough. If folks either don't get funded or the fund doesn't close the gap, this is a very broad question. What next?
Well, I think
Go ahead.
Go ahead. Okay.
No, please.
I think you've got other alternatives. You've got the normal lending that is going on. So we are still lending in all other areas. We have there's regular loans out there. There's home equities out there that have great rates right now. So again, check in with your lender or your branch folks and see what other products they have available. They're all still out there. None of them went away.
Thank you, Deb.
That is absolutely true. But there is also another consideration that I know a lot of people out there would say, never in my life would I do this, but it's called unemployment. The unemployment standards and eligibility have been greatly modified. Sole proprietors now can get unemployment. That was something that never could happen before. And so I think it's important that people take into consideration all the potential options. I've talked with a lot of businesses, and I have a lot of kind of business owners. A lot of people have been struggling with this very issue. And some people even have mentioned to me that the PPP program is basically an opportunity for them to buy time for their employees to basically let the unemployment system settle down a little bit so that they can actually take a claim, which, as we all have heard, this has been a major problem. And there is, some companies are furloughing, so they're people are being kind of laid off and they're able to go onto unemployment, but the health insurance is still covered during that time frame. That's one way. And by the way, that it would also be a PPP expense that would count. I believe, unless I'm misspeaking, Mike. So if I say anything stupid, Mike, please shout out, or Deb. So there is a lot of different options, but yes, this is a changing environment. And when this original PPP program came out, I mean, it's 2.5 months of expenses. Yes, your largest expense often is your payroll expense as a business. And so I think, in light of the amount of time that people had to pull something together quickly to get money into pockets, I think people did they did a pretty darn good job. However, this is not a 2-month problem. Nothing that I've heard from anybody suggests that this is a 2-month problem. And so I hope to God they don't open the schools right now. This is a killer. And it to the extent that people, this is just my opinion, and opinions are a dime a dozen, but this ain't over yet. And we've been pretty fortunate to this point in terms of people, not too many people dying up here, but people have died and are dying. So this is a killer. We have to be careful. And I think it's going to take a number of months before people it's just, when are you going to feel comfortable sitting in a restaurant again? And that's just the cold, hard reality of the situation we're in. So, look at this in terms of it being a long-term problem. Keep as much powder dry as possible. If you're paying rent or mortgages that you have not talked to your lender or landlord about, you should have those conversations. You may be fine for now as you're eating or chewing away at your savings, but how long are those savings going to last? And the fact of the matter is, most people, we've received thousands of deferment requests, and thousands of them are going out to, originally we were having discussions with the Fed and the OCC, which is our primary regulator in terms of what we could do. in terms of the deferrals, and frankly, they've been very cooperative in terms of backing our plays. So, I mean, people are going out 6 months, okay, and God only knows if that's going to be enough. We are in a pickle right now. Our society is in a pickle. So be conservative, be calm, and don't be afraid to ask for help. Thank you.
Thank you, Frank. Sobering for sure, but it's important that we have friends in the community that understand these things and that we have relationships established with folks like you, and regardless of who our lending partners are, that I think one of the core messages here is that honesty, candor, and timely communications are really going to be the success story here. A quick housekeeping question on the side, and I think we can move on a little bit from payroll protection. It asks that the calculation itself is about 2.5 months of payroll-related expenses and so on, and that it's expected to be expended in just 8 weeks. Is that because of the other things in the calculation, mortgage and other expenses?
That's exactly what it's about, is to,
okay.
But if you read the CARES Act directly, the intent is to cover payroll.
Makes perfect sense. Okay. Another question, more of a general one, but I think it's very timely given where you just brought us a moment ago, is, well, it's two pieces, I suppose. One is, it's not meant to be rhetorical. What is too much to spend for money? Many businesses have different credit experiences. Many businesses have different degrees of credit worthiness. And I guess the question is really more around, perhaps I'm answering it in real time, that I'm assuming that well-qualified lenders could advise case by case, given one's degree of leverage and what else is going on, how to protect one's business and one's personal assets from exploitation. There is some noise in the market about people accepting fees to apply for these programs for businesses. Yeah, well, there's crooks in every market. So I guess I'm looking for maybe a little consumer protection advice for our listeners as far as when they're looking at continuing to manage cash for their business. Some may be their own cash, some may be borrowed. Are there best practices in protecting oneself from usury or from getting their business out of order? Because this is a long-term vision here.
Honestly, I should defer to Deb and Mike on this, because they've seen and heard just about everything that's out there. And I have had obviously a number of conversations from a number of different perspectives, both before I was involved in this bank as well as while I've been here. The key is know who you're dealing with, and you know, reputation does matter, and being able to actually talk to someone matters, and to be able to talk to someone that you're familiar with matters. There is, and you're absolutely right, Ethan, there's a huge amount of fraud going on right now. I mean, it's and we all knew it was going to happen, especially when you take an economy that is based upon face-to-face contact, and you force all that through this electronic pipe that we're doing right now. And that's why things like what you're doing right now with the WebEx and I can see you, I can see how you're reacting, I can see your credibility. And that's something that I've been very proud that we're pivoting to now, because frankly, I don't understand why we hadn't done this earlier, except for customer adoption, but it is a credible way to establish a relationship and to have discussions with people. But reputation. What's the reputation? Is there a reputation? Just like you would determine whether or not you're going to buy a bicycle on eBay. Does this person actually have a rating, or rent a house through Airbnb or these other outfits? Before you send the money, you better make sure that person actually has a track record of trust, and a good one. In terms of, how much money is too much money? You know what? It's so situational. It really is. And you're right. It has to do with a lot of factors. How leveraged are you? Just how quickly do you need the turnaround? There are so many factors involved with this. We deal with some very highly sophisticated individuals who are dealing with other highly sophisticated individuals who are doing 6-month loans instantaneous at credit card rates, just because the opportunity is so great that interest doesn't matter really in the big picture. And they have to move that quickly to seize the opportunity. So it is about opportunity. It's about knowing A, how you're going to pay it back, and B, when that doesn't work, how you're going to pay it back in a way that doesn't endanger your personal or business structure, well-being. And those are what is my plan B? It should always be part of a decision when you're looking at extending out. Now, I recognize that in this kind of environment, that is become infinitely difficult, because we don't know what's going to happen next month. We don't know what's going to happen over the summer. Are we going to be done with this in September? I've actually even heard of a school in a different state that has chosen not to. They've already established they will not have in-person, in-school, in-house schooling until January of 2021. They've just called it and said, we're going to just do online learning until that time, because there's too much uncertainty of this. Are we not going to thing? So let's just make a plan and go with it. So, that's the world we're in right now. A lot of uncertainty. So you just have to, the key thing is talk with someone you actually trust. Or if you don't know anyone, talk to someone who has a good reputation, period.
Mm-hmm. And I think it would be fair to say in a community like ours, that even if it might be unusual for folks on this call, but there are probably some folks that don't, for whatever reason, have a strong relationship with any one lender. But I'm going to bet that people that they know and respect have those relationships, and that referral would provide a lot of safety around that connection. Something related to that also, I've seen differing storylines around it as to whether these programs, the EIDL and payroll protection, if they affect the credit score of the individual or the business that is entering into the commitment.
I think, Mike, you'd probably be best posed to, because you're dealing with this more connected than I am.
Yeah, and I guess the best answer is it possibly can, depending upon, because some of these, the EIDL portion of it, and that side of the SBA lending program, actually is a loan. It's a low interest loan. They make a credit decision based on credit worthiness. They do pull a credit bureau. So that would certainly affect a little bit a credit history. And then once you begin to make payments, it's like any other credit or lending facility. There'll be reporting requirements on those types of loans. On the PPP, if it's decided that part of the loan would be termed out over that 2-year or 18 months after the deferment, that is a loan. So that would be considered reportable. So these can be, these will be or could affect somebody's credit report in terms of what how they're paying these loans back.
Right, but I don't think, and correct me if I'm wrong, Mike, but I don't think there's a credit bureau isn't pulled for the PPP funds, correct? In terms of the application.
Correct.
Right.
For the EIDL, yes. For the PPP, no. Thank you for that clarification.
Right. So you're not going to get that negative from there being a pull, if you will.
Correct.
Gotcha. Thank you. Also, another question here, circling back to some of the SBA programming. Someone reporting in, they went on the SBA site yesterday, and this is paraphrasing. It said that the EIDL had been closed down because of the payroll program. I know they're not the same programs. They're kind of concurrent,
They are not the same program. They're separate. Like what Mike said, one is an actual legitimate loan or lending facility. I think there is some forgiveness for up to, there's a grant concept also affiliated with that. They might have done that because they know they're about to get crushed. I'm being dead serious.
Sure.
And because the EIDL loans, that requires legitimate underwriting, which is obviously more time intensive than just establishing that people submitted the appropriate paperwork and the math works. I mean, that's all it,
Gotcha.
that's pretty much what the PPP is about. Payroll for the year divided by 12 times 2.5 equals, there it is. So, and actually the banks or we are tasked with vetting a lot of that out to make sure that what's being submitted is accurate or within a modicum of accuracy. So I can't, once that program goes directly through SBA. It's not like the PPP that comes through us. So, they are facilitating that, they are administrating that, whereas we are facilitating the PPP. So there are slightly different programs. I don't know. I thought the EIDL also received $60 billion out of this second round here, but they might in the near term be saying, we're going to hold off because we know we're going to get crushed. But I'm just talking kind of out of my tail on this one because I don't have any direct knowledge.
Fair enough. Fair enough. Something else I think that we're all a little mindful of right now are there tips or recommendations from folks that are financial professionals to use the parlance of COVID-19 itself, for changing the curve of our own cash flow, as we continue to operate in what many experts call a low cash environment. Any recommendations from your camp, other than literally things like turning down the heat and eliminating non-essential expenses? Are there recommended strategies, whether it be perhaps refinancing an existing note or, again, you're the experts, I'm not, but I'm thinking a lot of people in our audience are trying to deliver as close to their customary value proposition to their audience as possible, but they're trying to do it while changing the curve of their burn rate. So any recommendations from inside the finance and lending world?
I'm going to go ahead and punt to Deb and Mike on this because this is right down their bailiwick.
Yeah, that's a great question, and I think we're seeing some folks that are really evaluating what they're trying to do and maybe trying to create some additional cash flow opportunities, whether it be refinancing a piece of property and maybe a mortgage and taking some additional equity out to help their cash flow situations, or increasing lines of credit because of the potential need that they may have, or consolidation of loans to maybe get the payment a little bit more manageable. So those are all really good strategies. And again, I would suggest you, getting back to the communication piece, to talk with us, talk with your lender, talk about the strategies and some of the opportunities available to create better cash flow opportunities. Because look, that's what we have to do now. We, as Frank had mentioned earlier, this thing is going to go on for a while. It's not going to end next month. It's not going to end in 3 months, 6 months. So we really need to be, as businesses, I think, all businesses, looking to create strategies that are going to, in the long term, help us. And that may be, again, adjusting financially our cash flows. It may be adjusting how we literally do business. Are we maybe changing sales platforms? Are we changing operational procedures? So all of those things kind of go together in terms of creating a strategy for what's going to happen in the next 6 to 12 months. And again, at that point, when it's normal, it's going to probably be the new normal. So we need to adjust, and I think you need to adjust financially. And again, getting back to those types of issues, I think, again, it's a great conversation with your lender, or hopefully us, to discuss some of the options out there as to how we can help and how we can create better situations for additional cash flows.
This might be an interesting opportunity, and I'm going to ask that at least two, if maybe all three of you respond to this, but we are getting in the final 5 minutes here, and I'm hearing a consistent message, one that is, I think, positive and inclusive, is that no matter where your business is right now, because there are some essential businesses that are handling a lot of money right now because they're very busy, and there's other businesses that are suddenly owner operated that used to be owner managed or just owned, it sounds like each and every one of us needs to have a check-in with at least one, if we have multiple finance partners, because I guess my concern, I mean, even just thinking as a consumer, I don't want to have conversations when most of my options are already exhausted. I think, my advice to a neighbor on the street would be, you know what? It sounds like you're getting through this okay, so call your banker anyway.
Correct.
Make sure your house is in good order. Make sure that, to Mike's point, maybe growing your line of credit when your credit score is strong and your leverage is low is a smart long-range plan, as opposed to trying to go to anybody when times have gotten worse for you and some of your choices have been eliminated functionally. Yeah, it's easier to stay healthy than it is to get healthy. So yes, any perhaps final recommendations or even resources, anything we should be reading as an audience, as just good consumers? Any recommendations for us for homework?
There's so many different sources of information and the like. I mean, I've just been going directly to the New York State websites. I mean, honestly, the federal stuff. I mean, you've watched the briefings. It's almost you can't make this stuff up. And so I mean, do not inject yourself with disinfectant. Don't do it. Unbelievable. So, but I think what the important thing is, and I've had these conversations, and then I'll defer to Mike and Deb, but the situation is changing so rapidly. There are so many different ideas in terms of stimulus and in terms of social welfare or help programs. This is evolving very quickly. And even after legislation is actually passed, there is a lag that happens when the agencies responsible for promulgating the intent of the statute come up with their own set of rules and qualifications and requirements that's associated with any one of these programs that comes out. So just because you've checked in before doesn't mean you shouldn't go ahead and check in again. And the other thing is, like I said before, I talked with people who said, no, I'm fine. My income's fine. I don't need this. I don't need a deferral. I don't need this, that, the other thing. And now they're saying, holy smokes, this is maybe going along a little bit further than I expected. And maybe I should be having these conversations to try to keep as much powder dry as possible, because I don't know how long this is going to go. It's reasonable. It is reasonable in this environment to have those conversations and to be better safe than sorry. So have the conversations, continuously check in. I think what you're doing here, Ethan, is fantastic. This is a great way to get kind of the word out. We need to all, as a community, be having these discussions that we're having right now. And I love the Q&A aspect to this, because frankly, that's what actually makes one of these things meaningful, as opposed to me just running my mouth. So I just not only have the conversations, but also check back, because the situation is changing almost daily. So Mike or Deb?
Yeah, I would reiterate, Frank, what you said, and Ethan, your comment too, and it kind of, I think, summarizes what we've been, the conversation we've had today, is, you know, trust your trusted advisors at this point. Now's the time to really go out and talk to certainly your banker, your accountant, your attorney, your insurance person.
Yes.
Because all the decisions you make are intertwined. You know, what's going to affect one is going to affect the other. And have those conversations. Make sure that, you know, if your communication is open, that you're progressing in the right spot, that you're utilizing the services and the opportunities that are out there, because that's going to be critical as we go forward here. Because again, we're in it for the long run, and this is not going to change overnight. And to have that critical information from your business partners is key. And we're here to help. We're glad to be part of that team of experts for our clients.
And we are here. We are in our offices. So call us. Call your financial lender. Call your accountant. They're all there to help. We're here. We're still available. So give us a call.
Yeah, I think just as just a final thing, you know, keep your communication up. But I'm telling you, we're treating this very, very seriously. We are looking and planning on this to be ugly for the foreseeable future here, which means planning that this is going to be the state of affairs through the summer, and maybe even into a first quarter of the following year of 21. That's how we're planning. That's how we're establishing our plan. Because frankly, plan for the worst and then just be happy if it doesn't happen. But if you don't plan, and it has to do with your family, your business, your livelihood, your children, you can get real hurt. So be healthy, be careful, take this very seriously, keep as much powder dry as possible. Don't go out doing huge expenditures that aren't necessary. And keep the communication up. We are here. Other institutions are also there and very good. So keep the dialogue going. And once again, I really appreciate your part, Ethan, in allowing this format to occur.
Well, thank you, Frank, Deb, Mike. Thank you to all the folks on the call today. I am inspired, and we certainly have a lot of work to do, and I appreciate, Frank, there are certainly many voices in the room and many points of view, but I suppose if I was going to put anyone in charge of my money, I would want it to be somebody with a conservative and long-range view. So again, thank you for everything you and CNB do for the community and for carving out an hour on a busy day, one of the busiest you've likely had in your career, to be with us. So again, thank you all, and the recording of this will be available to folks Monday. Have a fine weekend.
Take care. Thank you.